Right, let's go on to your In Focus section.
Okay, so what are we watching here in Focus? Well, dollar index, and the question we're asking today is, will the dollar see safe haven flows? So, we've obviously had a couple of weeks of market turmoil, but that's not to say that that's completely behind us. And so traditionally, in times of market turbulence, I should say, the US dollar has been and is seen as a safe haven into which money has traditionally flowed. However, in the last 2 weeks, we've actually seen weakness in the dollar, which has rallied, but not conclusively. In the chart here, we've plotted this dollar index up until last night's close, although we traded down again this morning. But I think what you can clearly see is that we remain below both the 20 and 50-day EMA lines, and that near-term downtrend line that I've drawn in red there is also weighing in on the picture. As we noted last week, China has been selling US dollar assets in predominantly US government bonds, and of course this might, and they're doing it in some size, they sold about 10% of their holdings up until the end of last week, so this may account for some of the weakness. But if we are to see a US rate rise soon, and that could be as soon as sort of a fortnight away, then the theory of the market suggests that we should also see dollar strength. But actually, if we look back over the last sort of 4 or 5 interest rate cycles, that may not happen in anything other than the short term. So we could find ourselves in the odd situation where we have market turbulence and a weakening dollar in the face of a potential US dollar rate rise. So quite an odd scenario if that happens. Obviously, the level to watch there would be, on the chart here, would be the 200-day EMA line denoted by the red line, and the recent low there at the bottom of that sharp drop and rally.